From New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Westin. We start with the markets once again today, and Abigail Doolittle is here. And I have to say, Abigail, when I woke up this morning and saw all that civil unrest and clearing right here in New York City, I thought the markets would really take a hit, but they haven't.
I think you're not alone in that view. That is a little bit puzzling, a head scratcher here. The idea that we have stocks higher, mixed at this point, but earlier up a little bit more, despite the fact that we do have all of this civil unrest, and especially close to home, right here in New York. I can tell you from my own personal experience, walking around, many stores are boarded up. Bloomingdale's right across the street, going up. That's the case. And you also have to wonder, David, in terms of the reopening here for the city, it's on track for next Monday. However, you have some of these businesses boarding up. There was one business, in fact, that had been boarded up during the virus. It's taken its boards off. Maybe they go down now or they go back up. So it's just when you take all of this into account, it's hard to believe that this is not hitting the economy. But the fact that you have stocks holding in there tells you that some traders believe that right now this civil unrest is unlikely to hit the corporate profit outlook that we're always talking about. However, if there is an unfortunate spike in COVID-19 a few weeks from now because of the proximity of protesters and what's going on, that could be a different story. The other big driver on the day, though, holding stocks, right around flat, small gains. The fact that we have the financials that move into the cyclical sectors once again happening as technology, the stay-at-home sector trades off a little bit. What's really amazing, the 10-year yield, it had been down just a little bit earlier, David, or excuse me, higher, right now about flat. But that tells you bonds, those are flat too. So investors really aren't worried about this fundamental picture that we're seeing here, the social unrest that you're talking about. Let's see whether or not that changes.
Abigail, pick up on something that you mentioned to me just earlier, and that is the dollar. How much of this is a weakening dollar?
I think that probably all of this rally, or much of this rally, really is the dollar. That's a hallmark of QE, quantitative easing, the quote-unquote money printing, that Jay Powell spoke about not so long ago, so that when you weaken the dollar, it makes risk assets that are denominated in the dollar much cheaper, so to speak. This has been a trick that we've seen many times in the previous rounds of quantitative easing. When the dollar goes down, stocks go up, commodities go up to a lesser degree. But I think that if you did not have this support from the Federal Reserve, simply on the monetary policy standpoint, putting aside the credit facilities and all the other stimulus that's out there, you probably would not have this rally for stocks. You would have investors looking more closely at these fundamentals. But it seems that markets, traders think the Fed still has their back, David.
That's what they have no reason to believe otherwise, given what the Fed has done and said. Thank you so much to Abigail Doolittle for that report on the markets. Well, as we've said, 2020 is really shaping up to be something of a year of crises, most recently with the civil unrest we talked about with Abigail. But before that, there was, of course, the pandemic and the economic downturn around the world. I talked earlier today with the SEC chairman. He is Jay Glayton, and I talked about what that was doing to the markets, what it was doing to the SEC, and most particularly, what it was doing to his enforcement efforts with respect to claims about the coronavirus.
The claims that look suspect or are clearly speculative or just on their face fraudulent, our enforcement team is out there. They're shutting down trading in companies that would do that. And we need to be. People are counting on us to look at those kind of claims, quickly assess whether they have any validity, and then where appropriate, shut down trading so we can find out if tales of riches to come are in fact true. That's our job. I can't thank the women and men of the enforcement division enough for being vigilant in this area. I think the number of trading suspensions is into the 20s. I recently had a call with my international colleagues, and my international colleagues gave our enforcement division the gold star for quick action in identifying these types of scams and shutting them down. So that's really kind of a frontline immediate job we have. In terms of disclosure and loans and that, look, what I've said to companies is be consistent across your community. If you're communicating with the marketplace, that communication ought to be consistent with whatever you're telling the government about your need for support. And by and large, I think companies are doing that, but it's important for good corporate hygiene, trust, that if you're telling the government you need money, you're telling your investors you need money.
What about some of the initiatives you were working on before the pandemic came up? Talk about like revisions to proxy rules. Do those continue apace, or do you have to put those to one side?
No, we have not put our policy making agenda to the side. We are a very, when you talk about organizations being affected in different ways by the operational constraints of social distancing and the health and safety structures that we live by, we're a very lucky organization. We can operate fairly effectively in a remote capacity, and we've been doing so. And look, the women and men in those policymaking divisions, they're committed to improving our markets and modernizing our markets. I'm not going to put that on hold unless I have to.
And so, for example, the proxy rules, where do they stand now?
They're on our agenda to be finished in this fiscal year, and I expect to have them finished in this fiscal year. I'm so pleased with the rigor that our staff has applied to all the comments we've received, and I think we're on schedule to finish them during this fiscal year.
What
That's
about
September 10th, for people who don't know about the SEC fiscal year? So by the end of this period.
And how do you feel about bringing people back to work at the SEC? I think you've said at least until July 15. Do you think that that's realistic?
Well, David, I do think it is realistic because we are able to function. I mean, every organization is different, and I'm not making choices for other organizations, but this organization functions very well in a virtual environment. There are a number of functions that we have that would improve with people on site. There are some functions where you do need people on site. Look, we live in a country where due process is important. And we have people who we're bringing actions against. And if they want the benefit of being interviewed face-to-face or being able to, in as virtual a face-to-face environment as possible, we need to provide that to them. We believe in due process. So those types of things we have to do. But by and large, we can operate very effectively remotely. And what I want to do is, as things get back to normal, and I hope they do, bring people back in those areas that are most acutely affected by remote working, and then go from there, keeping health and safety front of mind at all times. So I have the luxury of that, given the way we work. I know others don't, but that's how I'm looking at it here.
That was Jay Glayton. He's the chairman of the SEC. Coming up here, we're going to talk with Brian Brooks, the new acting comptroller currency, about the banks and the effect of these crises on the banks that he regulates. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. It is time now for Bloomberg First Word News, and for that we go to Karina Mitchell. Karina?
David, thank you. Some Democratic governors aren't buying President Trump's threat to deploy the military to put down street violence. Illinois Governor J.B. Pritzker says he doesn't believe the president can send troops into his state. The president has told governors and mayors they need to dominate the streets. Joe Biden is slamming President Trump's response to days of nationwide protests, saying he's, quote, fanning the flames of hate. The presumptive Democratic nominee spoke at Philadelphia City Hall earlier today. He accused the president of being more interested in power than in principle. Biden also called on Congress not to wait for the November election to begin to address inequities in economic opportunity and criminal justice that disproportionately affect African Americans. Meanwhile, the European Union's top executive and British Prime Minister Boris Johnson will meet later this month for talks that could give new momentum to the stalled post-Brexit negotiations. Negotiators resumed a fourth round of talks today, but there's little hope they'll reach a breakthrough on a future trade deal. The UK left the EU on January 31st, but remains in a transition period until the end of the year. And Italy is urging citizens to gather to work to revive the country as it prepares to lift restrictions on domestic travel. With a number of new coronavirus cases continuing to decline there, Italians will be allowed to travel freely around the country again starting tomorrow after almost 3 months of confinement to their home region. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. David.
Thank you so much, Karina. Well, airlines have been particularly hard hit by the pandemic, and it's not limited to U.S. airlines. Earlier today, our colleague Simone Foxman spoke with the CEO of Qatar Airways about the challenges his airline faces.
There is two parts to this question. One is when we will allow people to come back into the country as soon as it is possible, that people will be able to come back, and I think it will be very soon. They will have to get tested at the airport, and then they will have to go for 2 weeks quarantine in a hotel. Very similar to what's happening in the UK, in France, in Germany, in Switzerland, in Singapore, in India, in Bangkok. Everywhere, this is a requirement, and so will be a requirement in my country. When will the tourists come? This is, again, a difficult question to answer. They need to be comfortable. The media is giving so much mixed information about this virus that people are really uncertain of which way they have to go. I think that tourism will rebound as soon as there is a treatment or a vaccine.
At this time, have you asked the Qatari government for any assistance? Have you sought financing of any sort from banks? Where do you stand?
I'm very proud to say that Qatar Airways has still been using its own funds to continue our operations. We have not been to our government like most of the airlines around the world have gone for either state aid or subsidy. Exactly the airlines that used to accuse us of the same thing, and now they are going to ask for state aid and subsidy, whilst if we went to our government, we are going to ask for equity injection because our airline is owned by the government. We are still managing with the credit lines we have, the financing we had in place already, but as this may continue for a longer time, if it does, yes, we will ask for an equity injection from our owner, that is the state of Qatar.
One of the ways I know that you wanted to control costs was in potentially delaying delivery of some of your aircraft, and that you'd been in discussions with Airbus and Boeing about that. Where did those negotiations end up, and which planes, if any, have you delayed in terms of deliveries?
I'm not unique into pushing back deliveries of our airplane and not accepting airplane deliveries. All the airlines in the world is in the same boat. And what is now important is for both Boeing and Airbus to show to their customers that they were not only with them in good times, but they will also be with them in bad times. And they should accept the requirements of the airlines to delay deliveries of the airplanes until at least 2022. And if they don't oblige, they should then also know that they will permanently lose us as a customer to them.
Have negotiations not gone well so far?
We are negotiating, and as usual in Qatar Airways, we don't put our chips on the table in front of the media whilst we are having delicate negotiations with our suppliers.
Fair enough. I mean, do you foresee a permanently smaller fleet, or is part of the argument that you guys are going to get back to normal?
Air travel has always rebounded after every upheaval. I think we will again start growing, but how quickly we will start to grow is a question that I don't think any chief executive can for sure answer.
That was the CEO of Qatar Airways speaking earlier today with Bloomberg Television. Coming up next here on Balance of Power, we're going to talk with the new acting controller of the currency. He is Brian Brooks. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. The Office of the Comptroller of Currency regulates all national banks, and it has a new head. Brian Brooks has just been named as the acting controller of the currency, and we welcome him now to Bloomberg. Welcome and congratulations, Mr. Brooks, I should say, in your new position. Give us a sense right now. We're in a crisis, absolutely. We've got a pandemic, we've got an economic downturn, and now we have civil unrest. How is that affecting, or is it likely to affect the banks that you're responsible for?
David, it is going to affect the banks, and let me just begin by saying that it's a crisis that we all have to take seriously, and the most current part of the crisis is one of the most tragic things I think either you or I have ever experienced in our lives. Nobody could watch the video of the tragic events, starting with the death of George Floyd in just an incredible act of brutality. That has set a spark to a tinderbox out there, and my heart goes out to everybody who's affected. It's one of the worst things I've ever seen in my whole life. Banks are going to be part of the solution here on my watch. I promise you that. And clearly the downturn has affected them, but they're the delivery system for rescue aid. So stay tuned, but we're going to help.
Do you have any sense of whether some of that delivery system is in jeopardy in some of these neighborhoods that have been so badly affected with looting and rioting and things? There are banks in those areas. Are they being impaired in their ability to be a delivery system?
Well, you know, David, one of the really tragic things, and the stories that don't get told often enough, is in a lot of these neighborhoods there actually aren't banks. And that's part of the problem, is over the last 20 or 30 years, many banks eliminated their branches in low-income neighborhoods, in inner cities, and in parts of the country that we now call banking deserts. And that's what has led to some of the underinvestment that I think has produced the anger and the lack of opportunity that are leading to these protests today. So again, banks are having their own issues, and we're going to help them manage through all of that. But the real problem is kind of the opposite. It's that there aren't enough bank branches. There's not enough lending and investment in these communities. And that's, I think, what's causing this massive eruption out there that you're seeing.
So tell me about that a bit, because there's the immediate problem, obviously, of making sure that businesses stay up, the banks stay up, and things like that. But there's the longer term issue that you really identify that we're going to have to address, I believe, in this country. Talk to us about the Community Reinvestment Act. Exactly what is that, and what's the role of your office in that?
Yeah, so the Community Reinvestment Act was a really important law that was passed in 1977 to address the problem of banks only serving their preferred customers, which tended to be richer people and whiter people than the world as a whole. And the Community Reinvestment Act said, look, banks have a special privilege in our system. They have deposit insurance to prevent their depositors from losing money. They have access to the payment system, which the government has created. So they have a lot of special benefits. And the thinking was, in return for those benefits, they need to serve all their communities, not just the rich people or not just the people in the fancy neighborhoods. One of the things we've tried to do, David, just this year is to modernize and kind of reimagine the Community Reinvestment Act for the 21st century in ways that are designed specifically to help the kind of people who are expressing so much pain and anguish right now. The most important thing about it, David, is that historically we only measured banks' activities around their branches. And so the irony is, as banks started closing branches in poorer neighborhoods, they no longer got measured for their activities there, and the communities were sort of left behind. We're trying to solve for that today. We need to get their activities in a modern environment measured everywhere their customers live.
Yeah, it's such a great point. In so many parts of life, what you get as a result depends on what you're measuring. If you're measuring the wrong thing, you don't get the right result. At the same time, with the shutdown in so much of the country, that has affected the ability of businesses to repay loans and things. You've been outspoken on the possible dangers even for the banking system from that.
Yeah, David, I'm really very worried about this, and I think this is a piece of the puzzle that doesn't get well told. I think all of us take the human risk, the medical risk, the health risk of COVID-19 very, very seriously. But what we do in the world of policy is we have to balance risks and benefits, and we have to understand the consequences of our choices when we do those balancing. What worries me a lot is as we go into the third month and the fourth month of these broad shutdown orders, the consequences to people's lives become significant. And what I worry about is when we talk about reopening the economy, we're not really talking about money, we're talking about people's lives. Now in the banking system, what that means is businesses that borrowed money so that they could start a restaurant or start a shoe repair shop or a dry cleaner, those businesses haven't generated revenue in 3 or 4 months in many of our cities. That hurts the banks because the loans that were taken out to finance those businesses can't get repaid. The good news is the banks are big and healthy and they'll be okay. What might not be okay are the small business owners in these communities that are trying to make their lives better, their communities better, to feed their families. And the longer this goes on, there will be a cascade of losses. I have to deal with the losses to the banks. That's my privilege and responsibility to deal with. What I worry about is somebody needs to take responsibility for the lives that are being really ruined by these long-term shutdowns, and to balance that against the cost benefit.
Brian, let's turn to something that is rather technical now, and you are a lawyer with a background in financial regulation. I'm not, but the valid when made rule, which I had not really focused on, it sounds rather technical, but actually it could have real ramifications. Explain exactly why this is important and what is going on with your office.
Yeah, the valid when made rule, David, speaks to something that I think most of your watchers will understand intuitively, which is if I sign a contract with you and the contract is valid, and then you decide to assign that contract to somebody else, the terms of the contract don't change. If I promise to pay you rent and then you sell that contract to somebody else, I have to pay that person rent. The amount of the rent doesn't change. It's whatever the rent was when we made it. The quirk in banking law is that we allow banks to lend at an interest rate that's legal in their home state, and they can export that rate anywhere they want to. There was a funny decision out of a single court of appeals in New York a few years ago that said that even if a bank makes a loan that is legal when it's made, if the bank sells that loan to somebody else, the interest rate can become illegal because that investor is not a bank. That's sort of crazy, right? If you borrow money at 5%, you borrowed money at 5%. And if a new investor takes that loan, it should still be 5%. The reason this matters to people is if banks can't sell their loans in the market, then it means that the only credit that will ever be supplied in the country will be bank balance sheet credit, and banks are only so big. In our country, the reason we're a rich society is because we allow credit to come from a lot of different sources, some from the bank's balance sheet and some from the capital markets. So what the valid when made rule was designed to do is to bring more credit into the economy, which is something I strongly believe in. You know, the Federal Reserve a few years ago did a famous study, and the title of the study when it was reported was More Credit, Less Poverty. And one of my missions is to educate people to understand that credit is a good thing. Responsibly managed, prudently originated credit is what people need to build lives. So I come back to, you look at the protests and the riots that are going on in America, part of it is because we haven't had equal access to credit and capital. That's where opportunity comes from.
Okay, really appreciate you being with us, Mr. Brooks. And once again, congratulations on your new position as acting controller of the currency. That is Brian Brooks. Coming up here, we're going to talk about those protests and the civil unrest with a political scientist from Fordham. She is Christina Greer. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. It's time now for Bloomberg First Word News, and for that we go to Karina Mitchell.
David, Mayor Bill de Blasio still plans to begin reopening New York City on June 8th, despite the unrest related to protests over the death of George Floyd and a curfew that will continue for the rest of the week. Last week, the mayor estimated that between 200,000 and 400,000 people will be returning to work in construction, manufacturing, wholesale, and curbside retail during the first phase of the city's reopening. In Tokyo, the government is urging residents to use more caution after seeing a spike in new coronavirus cases. Businesses in the capital could be asked to close their doors again if the surge continues. Tokyo reported 34 cases today, the most in one day since May 9th. And the return of a tradition. Parisians began to return to the city's beloved sidewalk cafes as lockdown restrictions ease today. Paris officials are allowing outside seating areas with indoor seating off limits until June 22nd. And tables need to be spaced at least 3 feet apart, sharply cutting the number of customers able to be served at one time. Global news 24 hours a day on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. David.
Thanks so much, Karina. Well, last night we saw another night of civil unrest across the country, even after President Trump threatened to send in federal troops if mayors and governors couldn't get their arms around it. Welcome now political scientist Christina Greer. She's an associate professor of political science at Fordham and also the author of the book, Black Ethnics, Race, Immigration, and the American Dream. Thank you so much, Professor, for being back with us. Give us your perspective on a broader sense about where this civil unrest falls on a spectrum.
Well, I mean, I think we've definitely reached a boiling point. If we look at major cities and smaller cities across the nation, most people of my generation have never seen anything on this scale. But we have to ask ourselves, what is the root cause? And we know that it's not just about George Floyd. It's about systemic inequality. It's about a segment of the citizenry living under a constant state of fear and police violence. It's about rampant inequality. It's about 40 million Americans filing for unemployment, and we know millions more not having any job prospects. It's about a failure of the federal government to deal with the global pandemic and people feeling the pain and the anguish of over 100,000 Americans dead, and knowing that the president and members of his party aren't going to do anything to save or assist Americans that don't look a certain way or live in particular places. And so I think the peace that lots of people want to have and want to return to, quite frankly, isn't possible until folks understand the extent to which justice has not been served.
Exactly, and if we're going to make progress, I think we need to be very careful about the various elements of it because they tend to get mashed together. We have the police issue, which is clearly an issue. Nobody would deny that, having seen that video. We've got a real problem in this country, and it's not limited to Minneapolis. But we also have, as you say, the broader question of inequality, inequality of income, of wealth, of educational opportunity, of health care, which we saw really come to the forefront with this pandemic, as there was such a disproportionate effect on African Americans as well as on Hispanics, I must say. As we see these protests, what should they be protesting for, if I can ask it that way? What is it we could do concretely? What policy measures could we take that would start to address this?
So I just want to address one thing. You said no one would deny the video. Sadly, David, many people deny that video. They see nothing wrong with that video. There's always the question of, well, he probably did something before the police officer had to kneel on his neck. I've gotten lots of messages from unsavory individuals who are very happy. They view that it's one less black person in this country. We can't say that no one disagrees with that video. There's a real divide as to whether or not that excessive use of force that led to the death of George Floyd, or excessive use of force that led to the death of Eric Garner, or excessive use of force that led to the death of Breonna Taylor, who is an EMT. Sadly, there are a lot of people who think that that use of force is justified and in some ways glorified, because they don't think that black Americans belong in this country and that they should ever have the full rights of citizens. And so when you're asking what's the protest for, I mean, I, as a political scientist, firmly believe that protest politics and electoral politics have to go hand in hand. We don't get substantive changes in policy, usually in this country, until people take to the streets and show our elected leaders just how fed up they are. And once that policy comes into fruition, oftentimes there are more protests to push it even further. As we talked about what happened in the 60s, many of those uprisings and rebellions and protests, the end result was the Civil Rights Act of 1964, the Voting Rights Act of 65, the Immigration Act of 65, the Housing Act. We have those two in conjunction, protest and electoral change. And I think a lot of folks want to see change, not just at the federal level, with the abdication of the executive and his powers and his lack of understanding of what being executive should be, but a lot of people want to see some substantive change on their local and state levels, and that has nothing to do with partisanship. There are people who are really disappointed in Democratic mayors and how they've abdicated to police departments and assisted in providing them with hyper-paramilitary gear that will be used against their own residents. So I think that we want to see policy changes as to how communities interact with police, how police are trained to see members of communities, how educators are trained, how healthcare professionals are trained, how allocations of resources are distributed. I think that's the real end result of these protests. And unfortunately, quiet kneeling on the sidelines of a football field didn't yield results for certain individuals. Lots of people had an awakening, but many did not. Many refused to see what quiet kneeling would do. And so now we've moved beyond quiet kneeling, and it's making people's lives very uncomfortable, and they want it to go away. But I think the pain of so many of the protesters is it won't go away until you recognize the lack of justice and equality in this country.
Professor, I certainly take your point and agree with it that in a democracy, the only way you get fundamental change is through the ballot box, through politics. At the same time, when was the last time any administration, either Democrat or Republican at the national level, made a real difference in inequality in this country? Because I've seen numbers that indicate the difference between 1945 and 1980 and 1980 to the current time is dramatic in the growth of inequality since 1980, and that continued through Democratic and Republican administrations.
Yeah, I think that's what I'm saying. Some of this anguish actually has nothing to do with partisanship. Much of it does with Donald Trump and his white nationalist rhetoric, but much of it is that you're seeing people feel like no matter who's in power, things aren't changing. Now, I think we can, be a little more specific and explicit, and we can see policies that have happened under Democratic presidents versus Republican presidents and see how that's played out for many communities. But we also know that, there's some generational wealth conversations that we have to still address that affect who's in power. So, the fact that the GI Bill was not distributed properly, the fact that FDR made some concessions that excluded black women and we're still seeing the generational effects, the fact that the 2008 housing crisis, eviscerated the little bit of black wealth that has been circling within communities. And so I think that it needs to be a much broader partisan conversation, but on the day-to-day, we can also see, though, that there are real distinctions between the two parties when it comes to whether it's job creation, whether it's criminal justice, whether it's environmental policy, which we know disproportionately affects Black and Latinx communities, which puts an undue burden on their health care prices, and communities that don't really have hospitals and resources, which then further eviscerates the family wealth or lack thereof. So it's not always a direct one-to-one. Sometimes we have to sort of see the byproducts and the other effects of how this plays out in communities and keeps this inequity continuing to grow.
Okay, thank you so much, Professor. It's always a pleasure to have you with us. That is Associate Professor Christina Greer, Political Science Associate Professor from Fordham University. Coming up here, risk seems to be growing around the entire world. We're going to be talking about that next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We're seeing risks, not just in the United States, but around the world increase. And some people have spent careers trying to study those risks and understand them. One of them is Andrea Bonime-Blanc. She is the founder and the CEO of, give me the name. Andrea, are you there?
GEC Risk Advisory.
GEC Advisory. GEC Advisory. I knew it. I just forgot it. Sorry, Andrea. Thank you so much for being here. You understand these risks so terribly well. You have a way of really thinking about them in longer terms. Give us your framework and exactly how does it apply to things like civil unrest across the entire country, as well as a pandemic and an economic crisis? What is it telling us about where we are?
So I did a book about 6 months ago. It was published about 6 months ago called Gloom to Boom, How Leaders Transform Risk into Resilience and Value. And I start the book with what I call the 10 megatrends of our turbulent times. And this came out right before the pandemic started. So it's really talking about the bigger megatrends, the things that are happening over a period of years rather than just months or 12 months. And to me, the pandemic fits in terms of the social unrest that we're seeing, the healthcare challenges, under the rubric of the rise of ESG issues, environmental, social, and governance issues, which have been rising very, very fastly in the U.S. over the last couple of years, but have been around for a while. And under ESG, the social piece is really where the pandemic fits really well, where the issues coming from the healthcare challenges of the pandemic fit really well. I'm talking about worker health and safety. I'm talking about employment issues. I'm talking about, finding the right kinds of vaccines, et cetera, and the challenges that businesses have to keep up with these issues. And I would just suggest that the businesses that have been keeping up with these issues, the social issues, the ESG issues, I've added a T for technology, ESG and T, the companies that do a good job of incorporating those kinds of issues into their risk management and their governance oversight are the ones that are going to be more resilient and capable of dealing with these kinds of turbulent times that we have right now.
So Andrea, we hear a lot about ESG and now ESGT, as you style it. And in fact, I've talked to some investors in recent weeks that say, you know what, given the pandemic, those stocks, if you can categorize them, actually are doing better than other stocks, so investors seem to be going there. At the same time, how do we measure it? Particularly social, which is very prominent, as you say, particularly in this pandemic. I talked with Jay Glayton, who's the chair of the SEC, earlier today about that very question. I'm not sure how you measure social. If you're an investor, how do you know which companies to invest in?
Well, this is one of the biggest challenges of our times is we have the rise of ESG as a bunch of potential metrics to judge companies and their performance by, but we have just a variety of different ESG metrics that different organizations are proposing. And this has been going on for, 1 to 2 decades at this point, but I think it's coming to a head. And both companies and investors will start getting a little closer as to what the metrics are the most important ones to look at. Certainly there are OSHA kinds of metrics that are very relevant to today. The Occupational Health and Safety Administration, when we look at some of the issues that are taking place at the large meat processing factories and manufacturing facilities, how the workers are being treated, how many people get sick. These kinds of metrics can be very granular, and I think we just have to learn from experience and sort of understand the most important ones for purposes of the social piece, the environmental piece, the governance piece, and the technology piece. But it's going to be a while before we get there. I just think it's really good that we're talking about it as much as we are right now, and that the SEC is actually looking at it too. And from the perspective of creating some order of the chaos, I think it's great that they're demanding more, more discipline in terms of what the metrics mean and what the ESG funds are trying to do and what the companies are offering, because there's a lot of potential ESG washing for sure.
So, Andrea, I'd like to borrow from your rubric a couple of specific points that may apply given the crises we're facing. One of them is global trust is collapsing. One of the things that you say is there's a problem with global trust. And the other, which may be related, is 21st century ethical leadership, the sort of lack of that leadership. As we look around right now, where should we look for that kind of leadership that we trust at the same time? Is it the public sphere? Is it the private sphere? Are you seeing it anywhere?
Yes, I am seeing it in some places, and I think the silver lining to the very big clouds that we have right now is that we're seeing it both in the business sector and in the government sector. And if we just take our own country as an example, I think there are certain governors and local officials, whether it has to do with the pandemic or with the civil unrest that we now have, that are actually acting with responsibility, caring about their stakeholders, which are the citizens. If we look across the world, we certainly see certain countries that are doing way better than others, and it always goes back to leadership. And so that's the silver lining that I'm seeing, and that's also happening in the business sector. You're seeing CEOs of prominent companies speaking up, discussing the issue of inequality, of racism at work, saying that we need to do much more than we ever have on these topics. So that's all good silver lining, but it's really in the context of a much darker cloud, I think, which is the darker cloud of trust and leadership has been collapsing for the last 10 years or so. And Edelman Trust Barometer is a really good resource to understand that. And I would say that that trust factor is something that leaders have to earn. And if they don't serve their most important stakeholders on a regular, consistent basis, not just at the time of crisis, they will have that trust deficit. So we're at a crossroads, and I think it's very important for the right kind of leaders to be leading both in business and government and also, of course, in society.
Well, and Andrea, I also want to ask about that T that you added to ESG, the technology side of it, and to ask an overly simplistic question. At this point, is it helping us or hurting us? Because I think I see examples of both.
You're absolutely right. I think it's both a risk and an opportunity. The technology piece, the reason I've added it to ESG is because if we look around, or if we just stand in our own homes as we are right now, many of us, technology is enabling us in all kinds of ways, and technology is threatening us in a bunch of different ways. And, the cyber attack issue and the fact that COVID-19 has actually heightened that threat because everybody's working from home, and suddenly We have, myriad more targets for the cyber attackers to target. We really do live in a time where ESG and technology issues are all wrapped up and interconnected. And I think it's really important for both business people, governments, and us individually as human beings to think about those things and to both protect ourselves and also take advantage of opportunities that are presenting themselves right now.
Another thing you talk about is transparency versus opacity. And I wonder, connected with technology, and particularly social media perhaps right now, is more information informing us more or not? Are we building a Tower of Babel because there's so much information out there? It is not checked. We've given up on editors. We've given up on gatekeepers. Is that helping us as a society address some of the challenges you identify?
Absolutely not. I mean, I think, with sort of the expression garbage in, garbage out, if you allow all kinds of garbage to come into either social media or just discourse, the results will be not transparency, but opacity. And the trend that you're talking about that I talk about in my book is really, it starts with the idea that reputation risk was an issue that was accelerated by the rise of social media. But it also created this hyper-transparency, which was a good thing, in my opinion of many. But with time, we've seen the rise of the manipulation of information, of misinformation, of dark web, manipulated videos and audios and what have you. So we don't even know where the borderline is between reality and fake. And so we have the rise not only of hyper-transparency on the one hand, but also super opacity in the sense that we don't know which end is up. And so I agree with you. We're living in a very turbulent time. I'm the kind of person who will say more information is better, but it has to be good information and not information that creates social issues and even, can have terrible physical effects if, for example, social media, false information is unleashed and people attack each other, for example.
All right. Thank you so much, Andrea. Really great to have you with us. That is Andrea Bonime-Blanc, and she is the founder and CEO of GEC Risk Advisory. Coming up here, we're going to have our stock of the hour, which is Vista Outdoor, and I'll give you a hint, it has to do with guns. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Westin. It is time now for our stock of the hour. It is Vista Outdoors, and I understand it has something to do with guns. Kaylee Lyons is here to explain it to me. Kaylee?
Yeah, David, you're absolutely right. Vista Outdoors, of course, is an ammunition gun manufacturer. It is higher for an 8th straight day, up about 50% over the course of the past 8 sessions. Today, like yesterday, it's taking part in really a broad rally from gun manufacturers and other weapon stocks, all outperforming as we see these riots taking place across the U.S. and the president, of course, threatening to deploy large numbers of troops across U.S. cities. And in addition to that, we also got National Instant Criminal Background Check data for May showed background checks were up 75% last month, double-digit growth in every single state except Hawaii, the 3rd highest number of checks in the entire 22-year history. And this follows soaring background checks in both April and March. March, in fact, seeing a record number of background checks. And it just kind of shows this phenomenon of people concerned about the pandemic and its social effects going out and stockpiling guns. In the 3 months since the COVID-19 crisis began, more than 6 million guns have been purchased. An analyst over at KeyBank was noting today that these are really, quote, fear-based purchases amid the elevated social unrest we're seeing, and that this is likely to continue this month and in the coming months, especially as we get closer to the U.S. election, David.
Yeah, I mean, whether one agrees with it or not, it makes sense to me. I mean, because given what we've seen with the pandemic and then the economic problems and now the civil unrest, it feels like the social fabric may be fraying, which makes us all nervous. At the same time, none of that concern seems to be spilling over to the equity markets more generally. We wake up every morning and expect the markets to be down, and they're not. So How can they be going two different directions?
Well, we're seeing this kind of continuation of the Main Street versus Wall Street narrative. As you allude to, stocks are higher for a third day today, despite the fact that we do have these ongoing riots, any potential disruptions they could cause. And really what you're seeing is that investors don't seem to think that these riots at this point will have a material impact on the growth outlook. You're seeing that underscore not just the fact that stocks are higher today, but once again, it is those cyclical growth sensitive sectors outperforming. Energy, materials, financials are the ones leading the rally, while you're seeing stocks like tech underperforming today, really leading the market lower. The NASDAQ, I should mention, is in the red. So you're seeing that the market isn't too concerned about this, even if American gun buyers are at this point.
Yeah, exactly. They seem to be betting on a recovery, don't they?
Yeah,
essentially?
Yeah, they absolutely do. You're seeing that in the fact that, too, that the dollar is weaker for 4 days in a row. The greenback is kind of losing some of its safe haven appeal as the market seems to be focusing much more on that economic recovery narrative than anything else at this point.
Okay, Kaylee, really terrific reporting. Appreciate it greatly. That is Kaylee Lyons reporting on Vista Outdoors. That does it for the first hour of Balance of Power for today. We'll have a second hour, which will be on radio. Among other things, I'll get to talk to the mayor of my hometown, Flint, Michigan. That is Sheldon Neely. We'll also talk with the former director of the CBO, Douglas Holtz-Eakin. This is Bloomberg.